Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today. Well, as of yesterday, we did see a volatile action on the D Street. The Nifty, which opened higher, fell over by 450 points from the highs of the day to end with losses of nearly 2% during the monthly expiry session. Now, again, it was the 24,350 mark that we've been talking about on our channel that the index continues to find as a key resistance, and Thursday was not different at all. The Nifty not only ended in the deep red but also gave up that 24,000 mark as well on the even M&M. All of them contributed the fall on the Nifty that you saw yesterday. So yesterday was the end of the November series, and the Nifty ended that with losses of close to 300 points, and that was courtesy yesterday's sharp fall. Again, when we talk about today, Friday's session, the first day of the December series, will not only mark that, but will also lead to the introduction of 45 new names in the F&O space, which now includes three of the Adani Group companies, stocks like BSE, Angel One, CDSL, PSU names like IRFC, SJV, and Woodco, and new age names like even Paytm right there. So that will be important starting today. Of course, overseas, there were no overnight cues from Wall Street as the markets were shut in the US due to the Thanksgiving holiday. And of course, what the street will, however, notice for today is that the ceasefire violation that occurred between Israel and Lebanon just about 24 hours after being put into effect. So geopolitical concerns continue to be a dampener. Remember, even in yesterday's trading session, a whole host of theories were coming up that what did cause this sharp sell-off in the D Street? Was it the Russia-Ukraine war crisis, the geopolitical concerns there? Was it the massive FII sell-off? All of these factors were again coming up, and we'll try to address some of them with our top guests today. Again, for today, all eyes will also be on India's Q2 GDP numbers, viewers, which is likely to reveal a six-quarter low in the growth of the September quarter. As most of the analysts expect the manufacturing sector to be a key drag on the economic performance, reflecting broader concerns over the demand moderation as well. Apart from this, there were several other regulatory changes that have been informed after the market hours yesterday. So we'll time and again refer to that throughout the course of the day. Remember, beginning January 1st, expiry schedules for derivatives contracts will undergo major changes. Weekly Sensex contracts will shift from Fridays to Tuesdays. Monthly contracts for Sensex, the BankX and Sensex 50 will also all expire on the last Tuesday of the month now. These are important changes that we will come up to in separate videos as well for you to really understand that in a deeper fashion. Adding to these regulatory landscapes, SEBI has now announced the interoperability of the stock exchanges across segments, including cash, derivatives, and currency, and even interest rate derivatives as well. So that's as far as what the changes will be. Of course, as a handover, like I said, Wall Street cues are missing. Mood remains cautious within the weak cues from Asia Pacific markets, as the absence of direction from Wall Street is something that we need to mark. So the Nikkei is indicating a downwards, it's already down by about 0.7% in the morning action. ASX 200 about 0.5% lower. KOSPI was trading lower by about 1.5%. And the GIFT Nifty futures are also indicating a lower start of about 24,100 odd levels. A muted opening is what you could expect. Now, as far as the FII flows are concerned, FIIs have resumed their selling spree. They've offloaded equities worth about 11,000 crores as of yesterday. Although domestic institutional investors, they countered that purchase with about 8,718 crore rupees of purchase coming in. Now, of course, for the FIIs, yesterday's selling came in as the third largest single day selling for the foreign portfolio investors so far that we have seen this year as well. So that is also going to be extremely important to watch out for. Let's, in fact, welcome our guest on board. We have with us Mr. Mayuresh Joshi, Head of Equity Research at William & O'Neill India, now joining right in. Warm welcome to you, Mayuresh, and good to have you with us. Well, there's so much to talk about, but let's start off with what happened yesterday. Have you analyzed any data points as to what was the cause? Of course, there were a lot of theories that were coming up. And of course, add to that, the FIS sell-off to the tune of nearly 12,000 odd crore rupees that came in too. Just at a time when we were thinking that probably the large part of the exodus is over, the massive sell-off that we were seeing from FIS is over. Then you have this one day, bam, about a 12,000 crore rupees of a sell-off, and the market's again testing that 24,000 mark. How are you assessing the fall of yesterday?
Morning, Sakshi. I think you can probably attribute a multitude of reasons for the fall. FIS selling, as you pointed out, but a large part of the FIS selling is expected on two counts. One, in terms of how the yield movement has been, specifically in the US market, and the expectations in terms of more positive reforms expected to take place as Trump assumes office in January. There can be a decent amount of earnings expectations, and because of the bond yield spike, the emerging equity risk premium has obviously come down. I think that's the prima facie reason. Second element, obviously, is the kind of tariff impositions that can come through on a reciprocal basis across economies, including the emerging pack to a large extent. And therefore, I think with tariff impositions expected to come through, what kind of an impact can that have on local economies? What kind of impact can that have on global GDP? That is going to be extremely critical going forward. And let's not forget, I think if inflation stays a little bit tricky because of all these reasons whatsoever, globally as well as locally, as we've seen the print probably come a tad bit higher, the rate cut cycle probably gets elongated or delayed to that extent. And therefore, I think the street, which was very, very optimistic of a decent amount of rate cuts expected to come through, I think those hopes probably get delayed by a few months as well. So I think those are the primary reasons in terms of what's probably happening. Outside that, I think what happens on the geopolitical front, and specifically in the Indian context, actually earnings have been soft. They're expected to remain a little bit soft as well as we head into Q3, barring a few sectors. But overall, I think earnings is something that will determine the market trend. Seems to be soft at this juncture, and therefore a consolidation, a time and a price-wise correction for the markets is not ruled out.
A time-wise and a price-wise correction is not ruled out right there. So 24,000 reached. What is your sense, Mayuresh, we're entering this last part of 2024. The series has begun. How is this series going to pan out really? I mean, are we going to see deeper correction from 24,000? Because we were just expecting that at least in the interim there should be some bounce and then probably some more consolidation will play out. How would you look at the Nifty right there?
So, Sakshi, I think everybody's waiting for a Santa Claus rally, right? That's what I've been hearing from yesterday. That there should be a Santa Claus rally. We're entering December, and that's what has happened in the past as well. But two things again. I think Trump is assuming office in Jan, so there is nothing which is going to come out hard, specifically in the month of December. The second thing one must also note is that the financial year for a lot of institutions in the West ends on December, so there will be some element of profit booking that will still continue for the emerging pack. They've made tons of money in the emerging market, and they have to show their NAVs to their end investors as well. So to that extent, I think domestic liquidity should offset any kind of incremental selling that probably comes through, specifically from the FI accounts as we head into the next few weeks. But largely, I think I don't see a structural downside on the markets. I don't see a huge upside from the current levels for the markets. We might probably trade in the range. Certain sector stocks might do well.
Okay. And on the FII front, what is the kind of sense that you get this sharp sell-off that we saw yesterday after those 3 days of minuscule buying that we did see? Of course, this is the Thanksgiving holiday week, and of course, we expect that the FII volumes will be thin. Are they going to go away on a holiday? Are they going to come back with more sell-off coming in December? What's the sense you're getting there?
Not just with sovereign and family offices across the globe, but our own offices in the US will shut on 20th. So I think 20th December is when I think a lot of FI activity will probably go up. And therefore, I think the activity might be a little bit post 20th. And that's a little bit more active, the ultra HNIs as well in certain pockets. But in my sense, again, I think a large bulk of the selling is get incremental selling, as I said, which might get offset in terms of how the DI's liquidity and flows are coming through. And therefore, I think not seeing too much of a downside, maybe the range that we are now playing with, 23,200, 23,400 on the downside, 24,300, 24,500 on the upside. The 1,000 point range is where the Nifty might probably.
Okay, got that. Another space that I wanted to get a sense on again is Mayuresh. We've spoken to you last time when you came in. That's the Adani Group stocks, particularly. It's been a volatile week, but some positives coming in by way of supportive sentiments, clarification on the bribery charges that supported the sentiments for 2 days in a row for some of the stocks largely that were under question. Now, how would you really approach these stocks right now? Are you still finding them in a no-go area? Would you say that it's better to stay away and look at where the clarity is there in terms of fundamentals and technicals both?
Probably yes, Sakshi. And again, I think the hit that the stocks took, a large part of the recoupment has happened with the positive sentimental news that has come through. Now, what actually transpires over the next few weeks in terms of the actual filings that have probably happened and how does Adani probably tackle that as a group is something to be watched out for. So, in my sense now, I think the stocks might just consolidate around the current levels, wait for the developments happening on either or all the counts that you're probably speaking about. But within the pack specifically, I think Adani Ports is something to be kept on your watch list. Unique business, distinct business from what the other group stocks are probably doing, and therefore the expectations in terms of how this get mapped out in terms of its core fundamentals, its core balance sheet strength. I think it's a little bit differently placed compared to the rest of the group. So I think if I have to pick one stock to be kept on your watch list outside the group, Adani Ports might be.
Okay, fair enough. Well, apart from this, Mayuresh, we are going to see these new names getting added into the F&O space also. And a lot of these new age companies will also be in them. Now, what we've seen is that everything is working very well in favor for Zomato. Paytm out of nowhere has suddenly shot up, like, multi-bagger returns being seen this year after the regulatory issues started. But what we've seen in the past, whenever these such names have been added to F&O, there's a new found sell-off that begins. They are favorites of short sellers as well. So, does anything change for these new age tech stocks as they get included in the F&O space now?
So I just got a meme yesterday, right? India won the first test in Perth on a tricky surface, and then they're saying more stocks added. So Khelo India, Khelo. I think that probably continues for the Indian market. But I think Sakshi again, I think for most of these new age companies, right? When you're talking about Paytm, when you're talking about Zomato, I think
Yeah.
there are tailwinds specifically for a stock like Zomato, where quick commerce is probably expected to grow even further over the next few quarters as they tread into newer geographies, into semi-urban areas, and so on and so forth. And therefore, I think the business model and thesis that the market is going with. For Paytm, I think a large part of what has probably transpired in the last few quarters, post the regulatory changes and the hit that it probably took, the changes that has happened, the recoupment of business that is expected to come through over the next few quarters, both in terms of core profitability in key segments and growth thereof. I think a large part of that is now getting gestated into the price. So from a valuation perspective, from a base count perspective, as we see in markets for India, a large part is there in the price as we speak for these new age companies. Now it's really up to earnings delivery. If they can deliver a little
True.
bit better than what the street expects, you can probably expect a re-rating, but a significant upside from the current level. I think I find it a little bit not plausible or not justifiable at this stage.
Okay, we'll take a moment to look at the pre-opening trades right there, 23,838. We had opened a little bit lower at 23,700 or thereabouts, but we improved from that account. So that's better, about 0.3% lower in trade for sure. But we are now inching closer to 23,800 now, viewers. We tested 23,900 even yesterday, but now we have to keep out on 23,800 too on the markets. Let's look at some of the heavyweight counters to see how they are opening in the pre-opening space. Especially those that contributed to the sharp sell-off in the markets yesterday. So stocks like Reliance Industries, for that instance, is something that we should look at. HDFC Bank, ICICI Bank, the even IT majors like Infosys and TCS. Let's see how all of those are opening. So Reliance Industries about 0.4% lower at 1266. There's a mild opening. HDFC Bank about 0.3% lower in trade. Infosys down by about 0.3% as well. So those are the key heavyweight stocks that are actually indicative of a lower start in the pre-opening space yet again. Now let's also look at so ICICI Bank also just down by about 0.1%. Some of the other stocks that have been in news, let's see what is the indication that we are getting there. The entertainment is something that I want to really look at. Why? Because again, there is news that shareholders of the entertainment have rejected a proposal for the reappointment of Puneet Goenka as a director. And there you see about 3.9% of an uptick stock is reacting positively to that one, 128. Of course, some indications had come in earlier only when Puneet Goenka had expressed his interest to remain as the CEO. So there you have it. As a director, the reappointment has been rejected by the shareholders as a proposal, and there you see stock reacting positively on that one. Let's also look at some of the other stocks that are in focus today. M&M, of course, will be in focus. It's denied any penalty has been levied or considered on the company over the emission level. So that news was coming in yesterday. So that's a bit of a relief. It's about mild positive reaction to that one. Max Financial is something, and SBI Life is something that you should be looking at. These insurance majors. Why? Because referring to the regulatory concerns around the level of insurance business being channeled through bank assurance arrangements, the company has added that they would like to mention that IRDAI adopts a consultative process and seeks a feedback from all stakeholders right there. Some kind of a mild positive action is what you can actually see on Max Financial and SBI Life, but we will continue to discuss this space also with our guests today. Again, all the three, HDFC, SBI Life, and even Max Financial is something that we will look at because all three were sharply lower in the F&O space yesterday. Let's also look at Zomato, for instance. Again, remember, like I said, the BSE has also announced circuit limits of these 55 stocks effective today, November 29. So, Yes Bank, Zomato, and many others will be in focus. Adani, Total Gas, Paytm, LIC, JSW Energy, Nykaa, Varun Beverages. These are the stocks that will be in focus because of that too. And of course, we have to look at how they will be now included in the F&O segment as well. So some of those stocks will be important to track. Prestige Estates, Paytm, Angel One. These are the stocks that you can actually look at as to how they are opening because these have been now included in the F&O space too. Again, in the IPO space, remember viewers, you can keep an eye out on Enviro Infra Engineers. Remember, this is going to be listing on the bourses today. The IPO was subscribed about 89.9 times. There was a healthy subscription that we saw, and we will be keeping an eye out on how this company also lists right there. So let's get back with Mayuresh to discuss some of the more pockets, and we'll come back to the markets once they hit open as well. Mayuresh, the other space in from these heavyweight counters, Infi, HDFC Bank, Reliance Industries, largely IT space, particularly for sure. How are you really looking at this entire large cap space? Do you think the conviction is just not there because the FI exodus continues, or because mid caps and small caps were still better off? So how does one really understand that in the current sell-off that we are seeing in the markets?
I think, Sakshi, I think the best exit that FI in terms of profit booking or taking money off the table is through large cap of liquidity that probably. Therefore, I think that's in whatever you probably want to take off the table. And that's why I think incrementally you probably see large caps sell off first. Then they probably consolidate, and then there is some element of sell off that comes in from the mid caps and the small caps. Obviously, the larger mid caps do not have the issue because liquidity is still there. But with lesser known mid caps, where the holdings are probably there, there can be a huge price impact if there is volume selling that probably comes through. Therefore, again, the take is large caps from a valuation perspective, obviously a little bit better placed. From a beta perspective, obviously, I think in volatile markets, large caps probably hold out a little bit better than the broad caps.
Mm. Myrish, just on the IT pack particularly, I wanted to extend this conversation also because we are now in administration talk about tariff wars, trade wars again becoming a
Yeah.
heated space to watch out for. And for us, again, there'll be these two key sectors, the export-oriented sectors, IT and pharma, which will be most important for us to watch as to what could be the impact. Although the trade war talk is right now limited to the neighbors of US, maybe Mexico, Canada, and China for that instance. But how is it that you are really assessing what could be in the offing starting January?
So three factors. One, I think what you've seen in the past, right? If there is some element of tariff imposition that happens on chip manufacturers, specifically out of China, you're going to see a huge incremental burden that probably comes through. And chip applications are across appliances, not just restricted to the IT sector as a whole. You've seen
Mm.
that in terms of chips not available for the auto industry, for the consumer durable industry, so on and so forth. So unavailability of chips or some element of issues thereof might actually create a lot of issues for a lot of end user industries. The second element, obviously, is that if there is local hiring that is expected to take place, obviously, I think our IT companies have taken that experience on board, and therefore, I think it will be a much better experience this time around.
Mm.
And it would not create that much of a dent in terms of a lot of earnings as far as local hiring is concerned. But yes, that does create some element of doubt. Last but not the least, if rate cuts are delayed, the assumption which was that because of corporate rate cuts coming into the US, a large element of corporate spending, specifically in terms of discretionary IT, might actually accelerate. That might actually get delayed by a few months as the rate cut cycle gets prolonged. And therefore, I think these three key reasons which might impact IT earnings is something that might drag the sector as a whole. But let's see what actually comes through once Trump assumes
Mm.
office.
Okay, got that, Marish. We'll continue our conversation. Meanwhile, discuss with us the technicals, particularly that you need to watch out for in the markets. Very good morning to you, Midesh. Good to have you with us. After yesterday's sell off, are you going to be expecting more downside right at the beginning of the December series, or should one really take this as a one-day aberration, what we saw yesterday in the markets, Midesh?
Good morning, Sakshi. Good morning, Mayush bhai. Good morning to all our viewers. See, basically, after a vertical rise for 3 days, we spent in the consolidation, and yesterday we have seen a crack. So we
Hmm.
are still of the view that this crack needs to be bought into. We repeatedly said that this is a COVID moment. Probably now, if you see the entire setup of the PSU banks, that is looking pretty interesting. If you look at HDFC Bank, I mean, when the market is, the headline index is 8% down, it is at a 52-week high. So such
Hmm.
metrics are indicating the fact that the downside is limited from here on, and selected
Hmm.
mid cap, small cap, and large caps are where one need to open up the checkbook. So yes, these are the exciting times where one need to build the portfolio. But as we have repeatedly said again, Sakshi, that one also need to look at the existing portfolio as well. These are the times where the restructuring exercise needs to be taken care of. These are the times sectorial churning needs to be looked at. These are the times where you really need to come aggressively on certain stocks, because in the next 3 or 6 months you will definitely regret that we could have bought it at that point of time. So I think
Right.
for us, this is a buying moment. For us, in selected stock, advisable to go very aggressive. For us, it is a time for a sector rotation.
All right, sector rotation and select buying is what you should focus on. So, Mitesh, give us a few ideas that one can keep on their radars today.
All the old ideas are coming back on the surface. So I think within the large cap, we are absolutely bullish about Reliance Industries. We are of the view that now the stock will start slowly and gradually moving up. So from the large cap, Reliance is on our radar. Apart from that, from the FMCG pack, we like both Nestle and Britannia at this point of time. We are of the view that now FMCG pack sooner than later will surprise the street. So Britannia and Nestle is looking very interesting from the current level. Apart from that, as far as the small ticket stocks are concerned, uh, Infibeam Avenue is looking attractive at this point of time, and Bodal Chemical. These are the two stocks which we are looking for. So I think it's a mix of large cap, FMCG, and small and mid cap the theme which we are playing right now, Sakshi.
Okay, got that. So we'll keep all those names in mind. Let's also include, Mayuresh into the conversation. Mayuresh, I was reading out those, insurance concerns, right, that IRDAI has pointed out. Now, we do know that IRDAI is, worried about the bank insurance concerns, and it's likely to have advised the insurers to reduce the contribution of the banks to the business right there. How should one's approach be? And of course, there is this 100% FDI in insurance paper draft that is also undertaking. So a lot of things which are into the moving parts right there. How should one really look at the insurance basket of stocks?
Sure. Morning, Mitesh bhai, in the first place. No, I think two things. One, I think for the bank insurance itself, I think a large part of life insurance players have their dependency on their parent stroke banking channels as their biggest distributor and their biggest distribution partner as well. And therefore, with the tweak in rules that probably takes place, and if that does happen over the next few months, obviously they need to make changes to their entire distribution channel. Therefore, I think that will entail a lot of costs. So obviously, I think the expense stroke, commission stroke, upfront cost element that probably happens for a lot of these insurance players might start increasing exponentially as they start exploring different distribution channels. And that might take a hit in terms of their overall margins, the VNB margins, and the embedded value itself. Therefore, I think sector underpenetrated, expectations of growth expected to come through in the next few years. There is a reasonable amount of belief that the embedded value will exponentially increase. But all the tweaks that are probably happening, the product rationalization that these companies are doing since the budget changes over the last year and a half, that is going to impact margins and profitability to a certain extent. So let's wait and watch on how these regulations basically play out for the life insurance.
Okay, let's wait and watch is something that we should have as an approach as far as the insurance. Very quickly, Mitesh, could you also tell us how would you look at the new age tech stocks, Zomato, Paytm? They've been in thick action. Okay, let's quickly first look at the markets first. Let's come back to you, Mitesh, in a bit. 23,975. We have about a quarter percent of an uptick on the Nifty right now. So we have opened with a mild positive, 23,975. That does not look very bad at this point in time. Definitely looks good. Let's also pull up the Nifty Bank to see how that one is opening up in the morning trading session, and then let's see all the heavyweight counters that we have been talking about thus far with both our guests. Quarter percent uptick, 52,000 with us on the Nifty Bank as well. Let's look at HDFC Bank that both Mitesh and Mayuresh have talked about, and of course Reliance Industries as well. The IT space stocks, all of those we will pull up for all our viewers to really see how those are really working. HDFC Bank at 1801, about a half what percent of a move on the positive side, so that's positive. RIL about 0.6% higher at 1279. That's also moving in the positive zone right at the opening. Let's also see what are the indications coming in from IT Pack on the back foot, about 0.3% lower, 1851 as far as the IT space is concerned as of now. So when we look at the advance decline ratio, it's at 1241 advances to 386 declines right now. We have the small caps and the mid caps, however, also opening higher. The IT space is down in the red as of now. Banks are still about holding about 0.3% higher. PSU banks that were in favor yesterday are also up by 0.3%. Pharma is half odd percent higher in trade. Autos are just about 1/10% up in trade right now. That's as far as the sectoral action is concerned. FMCG is absolutely flat. Metals are absolutely flat as well. So it's the banks, financial services, PSUs that are in green. You also have the autos and oil and gas index also moving up. The capital goods index also moving up. But the CPSE index is down. So the PSU sector is down in trade. You have the IT space that's lagging and the real estate space, which is also down by about 0.4% odd or so. So those are the pockets. It's a mixed trades that you can actually see. Ratio of 2:1 as far as the advance or the declines are concerned right now. But the top gainers on the Nifty are also these life insurance names that we just discussed with Mayuresh right there. HDFC Life is up in trade about 2.3% higher. SBI Life, that's also up in trade right now. You also have the Adani Enterprises opening at 2459. So that's in the positive zone right now. And there you have it. The top gainers are coming on your screens. Dr. Reddy is also among the gainers. But what's not doing well is, in fact, the IT space stocks. Those are the ones that are dragging Ultratech, Cement, Grasim, HCL Tech, Tech Mahindra. These are the stocks that are dragging in trade. You also have TCS, Power Grid, maybe even a Hero Moto from the auto pack that's declining right now. But let's look at the Adani Group stocks. Adani Enterprises, like I said, is opening about 1% higher. 0.7% gains for the ports as well. But energy is the one that is rallying now, 7% higher. Remember, energy solutions as well as Adani Green were on the back foot, and they received the maximum dent when the entire sell-off came in for the group. But these are the spaces that are now outperforming. Both Adani Green and Adani Energy Solutions up by about 7.5% and 8.5% higher in trade. Adani Power also up by about 3% as well. So the third day running, and we see positive signs across the board on Adani Group. 3% higher for Adani Total Gas as well. Quickly, Midesh, let's come to you. How are you looking at the opening, and what catches your attention right at the opening?
Yeah, so not bad. Looking at the screen, I think pharma space will be the space to look at for the day. If you look at the initial ticks in the Dr. Reddy, is looking very promising at 12:20. One can go long in Dr. Reddy at 12:20 with a stop of 11.80. Potential very interesting at 15.23. Same is the case with Oro Pharma and Sun Pharma. So I think for the day, I think the day belongs to pharma. One can look at pharma, and within the auto, I think M&M is looking very interesting at 2937. One can go long for the target of 296070 with a stop loss of 2920.
Okay, got that. So from the pharma pack, Dr. Reddy's and M&M from the auto space is what looks interesting to Madesh. So you can keep an eye out on those as well. Let's also look at some of the other stocks. How are they reacting in the opening trade? Let's look at a Zomato that's opening in the green. We also have Geo Financial Services that's also opening higher in trade. However, Avenue Supermarts is down in trade. These are the three stocks that will be included in the F&O segment. So, okay, Zomato has now slipped now 1% lower to 82. Let's look at Geofin. That's opening about 1% higher, 329 for that one. And let's also look at Avenue Supermarts and Paytm. To look at how some of these stocks are really reacting, because these are going to be in focus in terms of the F&O space right there. Up about 1.5% for Geofinance. Then you have Avenue Supermarts down about 1%. So a mixed trade on that front from the F&O space stocks as well. Mayuresh, I'll come to you now. Which are the pockets that you believe in this current setup in the markets in the last series of 2024 that you believe should be the safest spaces to be in the markets for retail investors?
So I think select banks, because banks have given good set of numbers. And in my opinion, I think the last print in terms of deposit growth actually being very, very good in terms of 11.5%, credit growth 11.5%. So catching up with credit growth, those are positives. Then obviously with the market volatility, I think there is some element of doubt which starts creeping in, and therefore deposit growth should probably remain a little bit on the stronger side. And therefore select banks have given good set of numbers in my opinion. Select housing finance companies, opinion. Agrochemicals as a space with good monsoons, expectation is the second half should be equally good for a lot of these players as well. Specifically, we're catering to the domestic side of things. Select manufacturing and infrastructure names. I think they should start doing well as well, because a large part of the government capex is now expected to come through in the second half. It would have already started, and therefore I think incremental accelerated capex with mean better orders coming through with reasonable margins. And as these companies have been executing well, my own sense is that the second half can be very, very good for select companies within these spaces as well. So I think focus a large part of your portfolio onto the domestic cyclicals. As far as the safe themes, which are the defensive themes, are concerned, IT, you can probably hold on at this juncture. Let's see what probably happens, specifically in the mid-cap IT as I've always maintained. And within pharma, I think the biosecurity pharma companies, I think that is where I think there might not be too many tweaks as far as US policy making is concerned.
What is the name of the pharma stock that you just took?
Sorry, Sakshi?
What is the name of the pharma stock that you just took?
No, so Syngene is something that you should watch out for. I think Syngene.
Okay. Got that. All right. There is this other stock as well that we forgot to mention, but I'll just pull that up now. Credit Access Grameen is something that all the viewers must take note of. Why? Because there's a Goldman Sachs note where they have downgraded the stock to sell, and the stock is reacting sharply to that one, about 8.5% lower in trade today. Yes, 908 right now coming in. They have cut the target price from about 1426 to 564. And they believe that the earnings visibility is pretty clouded at the point in time amidst the asset quality concerns. The derating, they believe, is structural in nature as well. And they also believe they both expect the categories to see potential impact from the new microfinance guardrails and the present higher credit risk that persists right there. I just wanted to take your view on this one, Mayuresh. Of course, this is a pocket that has been, in concern, microfinance particularly, and now with downgrades coming in and severe concerns on credit risk as newer regulations impact is concerned, how should one be really limiting the impact on the exposure they already have in their portfolios to the microfinance space now?
I think you need to be a little bit watchful and look out for
Hmm.
companies that are probably having a little bit of a better leadership position where the corporate parentage probably looks strong and where
Yeah.
expectation of capital is not an issue.
Hmm.
Therefore, I think rural recovery is something that is on the cards, Sakshi. And if that probably happens, both asset quality pressures as well as collection efficiency should probably start inching higher. But what we have probably seen from the regulator at this juncture, I think one must really avoid the lower rung players at this juncture.
One must definitely avoid the lower rung names in this space. All right, Mayuresh, we'll thank you on that note and for being with us on this special edition to share with us all those wonderful insights like you always do. It's always great to speak to you on air, and I'm sure our viewers really appreciate all the guidance that you give them on week-on basis. Thank you so much and appreciate your time.
Thank you so much, Sakshi. It's always a pleasure being on your show. Thanks. Thanks.
Thank you so much. All right, viewers, we'll continue our discussion with Mitesh on that ground now. Mitesh, now, just about first 10 minutes out in trade, you did talk about pharma space to be in right now. Cipla is further gaining ground now, apart from Dr. Reddy's. Would you look at this one as well?
Yes, that's what we have talked about. I think Cipla is looking pretty interesting. Even if you know right now, all the pharma packs are hitting high. Cipla is hitting a new high, intraday high. Sun Pharma is hitting a new intraday high. Oro Pharma is the second gainer as far as the FNO gainers are concerned. So I think today is a day belongs to the pharma, as I said earlier, and the space is looking pretty interesting.
All right, so you can actually keep an eye out on the entire pharma bag. Okay, but there's one space which is not garnering strength, and that is the auto space. Mitesh, I wanted to discuss with you this as well. Even though in the last few days we've actually seen a slew of action coming in from by way of EV focus from major players within the four wheelers, within the two wheelers as well. Newer launches coming in, clear direction that the companies are really focusing themselves in. But again, we have actually seen the wholesale volumes for as per Jeffries in the auto sales of November. They believe it's going to be adversely impacted by the earlier timing of the festive season, the muted demand from the urban consumption space as well. How should one be really looking at the auto space? It's been pretty volatile. Where does one really keep their focus here?
Exactly. I think you narrated it beautifully, pretty confusing. And I think now one should look at only the big boys. So technically
Yeah.
speaking, two stocks are looking very interesting, Sakshi, to us at this point of time is undoubtedly first is Tata Motor. If you look at the entire setup of Tata Motor from 750 to 780 is the range which you are looking at. Stock is trading at 782. So I think this is the time to accumulate Tata Motor, at least from the 3 to 6 months perspective. We are looking for around 850 to 900 kind of a levels. Apart from that, if you look at the entire run up of Maruti, I mean, it is not that interesting at all. Even when the Bajaj Autos and the Hero Motors and the Tata Motors are running, the stock has not made a great comeback. So I think as of now, at this point of time, around 11,000, 10,500, 11,000 are the levels where we are looking at the stocks to stabilize and again make a next big move. So for us, Maruti is definitely at the current level is a buy with a target of 12,500, 13,000 in the next 3 to 6 months. So within the entire auto pack, Tata Motor followed by Maruti is our technical picks right now.
Okay, got that. We will keep an eye out on these two stocks from the auto pack as well. Apart from this, Mitesh, I also wanted to discuss with you some of these new age names, stocks like Zomato, for instance. Also wanted to discuss with you maybe a Paytm, which has garnered a lot of strength in the recent times. Honasa today, for the second, third day in a row, is consistently buzzing again. Swiggy, of course, got those higher targets and therefore it shot up above 500 mark as well, although it's a recently listed stock, you won't have charts for that one. Your own sense of how should one be approaching? Some of these stocks are now getting included in the F&O space as well. So again, one needs to understand what will be the approach to these stocks. Will there be a reversal in the trend in the past? For something that even Mayuresh I asked, that when these stocks like Justal, you would remember when they had entered F&O, suddenly they had become short sellers favorites and all that, and before that they were all in thick shape. Again, for Zomato, it's been a favorite, a multi-bagger right now. Are there any concerns by coming into the phase there can be a reversal in some of these stocks?
Yes, actually, you have made a brilliant point that when these kind of new age stocks are added into the F&O space, generally the first leg is used as by the short sellers, or they are used for an exit opportunity, because now you have these stocks in F&O, so you can obviously hedge it. Earlier, if Zomato is going down or any other stock is going down, you don't have any other choice apart from selling your own delivery. But now you can hedge. So I think two kind of interest will come in these kind of stocks, all those stocks which are new age. First is the speculation interest, and second is the hedging interest. So probably now the marathon run which we had witnessed in past is probably going to end sooner than later, because now there are people who will use these stocks as a BTST or for the short term trading. Apart from that, there are people who are using these stocks as an opportunity to hedge if the stock is going to go down. So the only one thing which we can assure is that volatility go up in these kind of stocks. But having said that, if you're technically looking at the setup, let's talk what exactly the technicals are telling us. The technicals are telling us that there is a trend reversal in the short term, but one need to be very careful with the trend. Second thing, you need to approach these stocks only from the trading viewpoint and use trailing stop loss as your exit strategy. So, for an example, if I'm buying Paytm at Zomato at 284, probably my stop is around 250. I keep on trailing it as long as the rally is on the card. Same is the case with Paytm. But if you look at the Paytm, probably now the stop loss would be around 850, 900, and I will carry this rally. So you need to be very careful with your stop losses, because the volatility is going to be very higher. But having said that, yes, there is a speculative interest, and you might see Paytm trading around 1050, 1100. But don't use these moves to invest your capital in these stocks. These are the trading bets. So please segregate from the trading bets to the investment bets.
Wonderful, Mitesh. Thanks for giving all that clarity right there. What is the strategy that one should really adopt on that front when these stocks start to come in the FNO space? Let's also discuss the Adani Group stocks yet again with you, Mitesh. We've discussed this space before with you as well. Last 1 week has been extremely volatile. These stocks have reacted to every negative and every positive news with exuberance. And last 3 days consecutively, we've been seeing a lot of positives again flow. Some clarification from the group has come in. Some senior advocates have also come out in favor right there. Today, again, we do see some bounce coming back. Do you think the worst is penciled in? Could there be further developments that could again dent the sentiment here? What is the advice that you are extending to all those investors who've been holding the stocks in their portfolio, long-term portfolio, and for those who may be looking at these tips to enter afresh?
Okay. So let me not talk about technicals for the first few minutes and then talk about technical. So the first thing is that this is the only group in India, unfortunately, which is attracting too many noises. But if you look at the chart pattern, Sakshi, every noise has been responded positively. So one takeaway is that after every fall, the stock is not, falling 30, 40, 50%.
Yeah.
Even after whatever news you have, and they have the ability to bounce back, which means that there are some tactics being used by the players. I don't know, God knows, but then one should definitely use the selling opportunity in these kind of stocks as an accumulation opportunity. So whenever you feel you are getting 20% cut, 25% cut, 10% cut in a day, it is advisable to pump in money in this group in these stocks. The only narrative for this is that these stocks and the entire group has the ability to bounce back. So probably by looking at this, I am of the view that one should buy the stocks at every decline. On the contrary, if you are away from this group and if you are thinking to put in the money, I think this is the right time. So our view is
Okay.
contra as far as the entire Adani group is concerned. One should
Hmm.
keep buying the two flagship companies, that is Adani Enterprise and Adani Port.
Okay, understood. So that's fair enough as far as the Adani Group is concerned. 24,000 is back on the Nifty viewer. So let's not lose sight of that. We are seeing bounce return about 100 points of an uptick is what you already have on the Nifty now. 24,017 is what it is trading at this point in time. So gains coming back. First 15 minutes out. And what are the charts really telling you now, Mitesh, as far as the Nifty is concerned with this initial bounce?
Yeah, so I mean, Sakshi, let's look at the bounce from the second half perspective, because it might happen that whatever we might have seen in the first half might get sold
Yeah.
into the second half. But looking at the kind of rally which we are witnessing in selected pharma stocks, and probably the way by which Reliance and HDFC is behaving in the first half, I am of the view that the rally will sustain, but the clear cut view will come post 12 or 12:30. So let us wait and watch and open up the checkbooks at least for the intraday in the second
Hmm.
half. The selected stocks which we have recommended long into those stocks. As far as the trend reversal is concerned, or it is advisable to say that the yesterday's sell-off was one-off. I think let's
Yeah.
wait for.
Brilliant, brilliant. Okay, now Mitesh, two other pockets I wanted to discuss. That is the defense and the railway space. Last few days, we've again seen a lot of bounce return to many of these stocks. Maybe stocks like Cochin Shipyard, GRSE, Mazicon Dock, HALBL also have been consistently moving up. From the defense, also we had IRFC, RVNL, Railtel, even Jupiter Wagons coming back sharply as well. Today again, there's a softer trade, a mild negative opening for most of these stocks yet again. What is the approach that you are advising clients at this point in time? Because why I'm asking this is, especially in 2024, these were the two pockets that outperformed, and a lot of retail investors, they made a large part of their portfolios filled with defense and railway names right here. I also will put one more point as to why am I asking this. This will be more of from a macro perspective. Just recently, we've got those, election results for various states as well, especially for Maharashtra. With the center returning in greater power, do you think focus will again be on the old economy, on creating more bridges, more railways, allocation towards defense will come back into focus? Do you think things are turning back in favor for some of them?
Not exactly, and not now. Sakshi, this
Hmm.
is the trend. Then when the headline index gives a meaningful correction, post
Yeah.
that the winners and the sectors always changes. So what is working in the first half will not necessarily work in the second half.
Right.
What is worked for those stocks in the first half will not work for those stocks in the second half. So how technically these stocks are placing? Let us talk about that. So technically, and after in terms of a profit booking. So now we are of the view that for a longer period of time, these stocks will spend a quality time in consolidation. So from a risk
Hmm.
reward point of view, it is not advisable to pick up this space right now. I'm talking about defense and railway in particular.
Yeah.
But if you're talking about the other PSU stocks, like for an example, BHEL or any PSU bank, yes, they are the
Yeah.
stocks to look at. So within the PSU also you have a long and short trade. We are of the view that railway and defense as of now will spend quality time in consolidation. So not advisable to touch those stocks right now, looking at the risk reward portfolio, because
Hmm.
right now other sectors and other stocks probably in the next 6 months or 1 year will deliver good return with good surety as compared to relevant defense.
Okay, got that. Viewers, I'll just name a few stocks that you should be probably keeping an eye out on now. NCC is something that you can keep an eye out on. Remember, the company has won orders worth about 3,389 odd crore rupees, and therefore you've seen about a 2.7% uptick on this one. Some of the fund houses recommendations that came in and probably are getting that reaction on the markets is Apollo Hospitals. HSBC came out with a buy rating and a target price of 8,220 on this one. From the hospital space, again, HSBC came out with two or more reports. On Kim's, they had a buy rating with a 670 kind of a target price. On Rainbow, they maintained a buy rating and a target price of 1,800 as well. On Aster DM Healthcare, they maintained a buy with a 550 kind of a target price. So for them, it was the hospital space that came back into focus. Citi came out with a report on Divis Laboratories as well, which they maintained a buy rating and a target price of 6850 on this one as well. Mitesh, you began by talking about how pharma is looking positive. Let's also discuss these two aspects, the healthcare space as well as the diagnostic space. Are there any interesting names that are also looking good to you technically within these two spaces?
Dr. Lal Path Lab is looking pretty interesting
Okay.
as now. Apart from that, even if you look at the entire space, I think as you have mentioned in the hospitality sector, I think Apollo Hospital
Yeah.
at 16 is also looking pretty interesting. As far as Lal Path Lab is concerned, we are of the view that about 2920 there is a breakout. So now the stock is heading for 3100, 3200 in the near future. And as far as
Right.
Apollo Hospital is concerned, we are looking a very strong upside. I think 7500 to 7800 is on the card. So yes, these two spaces are looking interesting.
Okay, these two spaces are definitely looking interesting as of now. Apart from this, Mitesh, could you tell us within the mid and the small caps, the broader markets particularly, where are you keeping an eye out on? You did take some initial names like Bodal Chemicals, for that instance, Infibeam Avenues. But beyond that as well, are there any several pockets also which could be clubbed to see as a favorable value pockets right now in mid and small caps?
I think three sectors, Sakshi, will come back very strongly in the next 9 to 12 months. That's what our
Hmm.
house is. First, within that is, I think, textile.
Okay.
Textile will go very strongly in the next 6 to 9 months. And within that, our favorite pick is Ambika Cotton Mill. So I think that is
Okay.
the we have keep on recommending to our clients. So this is
Hmm.
the which is looking pretty interesting to us. Ambika Cotton Mill, and we are of the view that sooner than later you will see 1800, 2000 kind of a target in the stocks. Second,
Okay.
the entire sugar sector will come back very positively, Sakshi.
Okay.
So with sugar, we are of the view that Balrampur Chini is looking pretty interesting to us as of now. And Balrampur Chini, even if you look at the chart pattern, around 650 to 700 is what we are advocating. Apart from
Hmm.
that, we also like EID Perry as well. So in from the current level, one can eye 20% to 30% kind of an upside. Third
Okay.
sector, like very interestingly right now, which has come up very strongly, is the entire fertilizer space. So within the fertilizer,
Hmm.
what we are looking at is a Chambal fertilizer followed by Coromandel International. So I think the agri commodity or agri related spaces are looking pretty interesting. The commodity, in short, the commodity space is looking pretty interesting. Textile, sugar, and fertilizer. We are of the view that in the next 6 to 9 months, there are good opportunities to make at least 20 to 30% return on these stocks and the sector.
Okay, got that. So agri and commodity space is what you could definitely look at. Ambika cotton, stocks like Balrampur Chini, EID Perry. You can also look at fertilizers and chemicals names right there. These are the pockets within the mid and the small caps viewers that you can definitely look at as interesting bets in the current market space right here as well. Another stock that I wanted your view on is Z Entertainment. Why I'm asking this today is I read this out in the opening commentary as well because the shareholders have rejected the appointment of Puneet Goenka now as the director. This is something that we had got as an indication, and the stock has shot up already 130. Do you think slowly and gradually things which were the worst for the company are being buried in the past, and things may start to look positive? Z Entertainment, would you look at as a trader's zone stock?
See, actually, when you're talking about playing the turnaround story, okay,
Yeah.
the only thing and the only one thing and the most boring thing is to keep your stops at place. So at Z Entertainment, am I a buyer at 130? The answer is yes. Provided that if I follow the strict stop loss discipline, which should be and must be kept at 105. Because when you're talking about playing this kind of a story, you should be ready to digest high volatility and deeper stop losses. So at
Hmm.
105, with a stop of 105, am I buying at 130? The answer is yes. Once the stock start moving up, I will trail my stop loss. So if you are not ready to trail the stop loss, if you are not ready to follow the boring practices, if you are not ready to stick to the discipline, advisable not get into this tender.
Understood. Well, last question to you on the show today, then, Mitesh. I want to understand we've begun this December series, at least on a positive note, right there. I was discussing with Mayuresh before you joined in as well. Will Santa come to town in December? What's the sense you advise for December series to investors?
Yes, I think Santa will definitely come because we have witnessed a very strong correction, Sakshi, and in certain pockets, the correction is to the tune of 30 to 40%. We are of the view that December series should and must be close about 24,500. So in the band of 24,500 to 24,800 is what we are looking at. Why, Sakshi? It is because in the year, in the next month, we are completing one quarter. So for us, quarterly charts plays a significant interest because in this quarter only, you have witnessed 10% correction in the headline index. So on the quarterly chart, there will be a marathon trend which can be played out in the next financial year. That picture will be pretty clear in the first week of January 2025. So for us, we are also eagerly waiting for Nifty to close about 24,500. And if that is the case, Sakshi, be prepared for a very golden rally in the year 2025. Let's hope for the best.
Okay, wonderful. Well, on that note, thank you so much, Mitesh, for being with us and sharing such wonderful ideas. It's always extremely good to speak to you with the clarity that you speak and the guidance that you give with our viewers, to all our viewers, is truly appreciated. Thank you so much.
Thank you.
All right, viewers, we'll start wrapping up the morning trading edition now for all of you on market today. 24,000 is back on the Nifty amidst a softer start, but we actually saw 0.4% of gains coming through. Let's see whether this sustains through the course of the day and on the first day of the December series right there. But thus, before the weekend comes in, and remember, right after the market shuts shop, we will be getting the GDP data as well. So we need to focus on, as the day progresses, on how the geopolitical concerns are shaping up, on how the global markets in the Asia Pacific region are panning out. And of course, towards the end of the session, we will also be looking at the weekend cues coming in, as well as on the macro front domestically on GDP front right now. But there you go. On your screens are Nifty gainers, Davis Laboratories, Adani Ports, Cipla. Pharma space, like Mitesh pointed out, is something that you can keep an eye out on right there. Adani Enterprises, Sun Pharma, M&M. These are the stocks that are upwards of 1.5% each that you can see as among the top gainers on the Nifty. On the losing front, you have Power Grid, you have Shriram Finance, ITC. These are the stocks that are actually trading softer in trade. But all in all, it's a positive start. Let's hope that it sustains, and we will continue to bring you all the market perspective from top market guests through the course of the day to help you understand which way should you be really putting in your money. Many thanks for joining in on the morning edition, but do stay tuned. There's a lot more coming up on your screens next.
After a week of intense scrutiny and negative headlines, there could finally be some relief for the Adani Group. The Andhra Pradesh government has indicated that it is unlikely to cancel power purchase agreements linked to the Adani Group. Finance Minister Payavulla Keshav stated that the state is carefully reviewing the agreements considering their financial and legal implications, and a final decision